Just when everyone thought that investment in gold is unlikely to give positive returns, the shining metal has surprised by rising to a 6-month high. Gold is trading in the international market near a key technical level of $1,300 per ounce. Let's do a 3-point analysis on what are the reasons behind rise in gold prices and what's the outlook going forward. 1. What prevented the rise in gold prices in 2018? Gold, which is considered a safe haven, was ignored for the most part of 2018. The reasons that prevented the rise in gold prices were the strength of the US dollar that came from rising interest rates in the United States. 2018 saw the most aggressive monetary tightening by the Federal Reserve since they ended their quantitative easing program in 2015. US Fed raised rates on 4 separate occasions during 2018. However, towards the end of the year, Treasury yields accelerated their decline after a weaker than expected manufacturing index number for December. A weakness in the index indicates a slowing economy. It was clear that the interest rate hikes by the Federal Reserve are now tapering off, mainly on account of growth concerns going forward. This is leading to the US dollar weakening, and investors are now beginning to seek refuge in gold. 2. What could lend support to gold prices? Alistair McLeod, head of research of Gold Money, said that the great dollar unwind is now overhanging the markets. The move towards gold and against the dollar in Asia accelerated in 2018, with Russia having replaced the dollar with gold as its principal reserve currency. Further, China has laid the foundation with an oil yuan futures contract, which can be a bridge to yuan gold contracts in both Hong Kong and Dubai. This is a direct challenge to the dollar as a reserve currency. Further, the ongoing trade war between the US and China has now reached the US shores. Earlier, China was taking the blows on account of the restrictions imposed by the US, but now Chinese consumers have hit back. A surprising warning from Apple about slowing sales, especially in China, has delivered the message home to US President Donald Trump. 3. What's the outlook on gold prices in the year 2019? Gold prices are reacting to the increased demand for the precious metal from various quarters. 2019 is expected to see a balancing of the gold supply and demand. Central banks are accumulating the bullion as well, adding 425 tons in the year to September 2018. Now, Chinese private sector continues to hoard gold, as seen in the withdrawals from the Shanghai Gold Exchange, which has now touched a 1,900-ton annualized rate. India's total gold imports are also not showing any signs of slowing and were at 919 tons in the year to end September, according to the World Gold Council. Now, these demands alone add up to over 3,300 tons annually, which is the same as global mine supply. Now, if you add supply restrictions like those imposed by China on exporting gold, then we have a solid bull case for the gold as an investment vehicle in 2019.